Hey guys, Courtney here. I am so excited to be sharing with you my friend Dwayne Richards. And we met at an event last year, and I was super excited about the fact that he is from Canada. He is a CPA in Canada, and we think along the same lines, which is great. So, for all of my Canadian friends, I wanted to make sure I got him on here and was able to help you comprehend some things about Canada and how all the tax laws work. So, Dwayne, I'm going to let you just explain to them kind of your background and what your focus is and your mission. And then I'm going to ask you some questions along the way.
All right. I guess the mission is, I use it, it's a little bit funny, but I say I bring hope to the present, especially now when you got so many people don't really know where their paycheck is going or where the next paycheck is coming from. But a number of people somewhere in the U.S. are all of a sudden to qualify for government relief programs, they need to be up to date on their taxes.
Yes.
And they start to panic because they maybe haven't filed a tax return in 1 to up to 10 years. I have a client, we're just doing 10 years of tax returns for her. So crazy. We're bringing hope in hope and the light at the end of the tunnel, getting to understand taxes. So that's the quick piece, but it really, similar to you, we just make the whole tax situation understandable. I say I'm the bridge, in Canada, it's the Canada Revenue Agency. So we bridge the gap between converting things from government tax laws and the Income Tax Act to make it understandable for everyday person who's trying to put some extra money in their bank account.
I love it. And how long have you been an accountant?
A long time. I look younger than I am. So actually, I have my accounting designation. I'm 22 years, and I spent 18 years. And I didn't understand this stuff as a professional accountant. I'm like, if I didn't understand this as a professional accountant, how does the average person who's just starting a home-based business going to understand? So I spent 18 years in working for multinational corporations, driving every day to the office, not tax deductible. Paying a mortgage, not tax deductible. Paying for my cell phone, my internet, not tax deductible. Wow. And I'm like, until I met someone like you here in Canada, and he is works with home-based business and direct sales people. And then all of a sudden I saw the presentation. And then when I left the corporate world, I tried it. I didn't do it very well. I've had a toe in 12 different network marketing companies, and now we just say I'm a fantastic customer. Yeah. So I'm still a customer. So some of my friends, we buy product and it gets delivered to our home. So I understand the industry. I understand the benefits of it, and I'm like, I just don't have to hold a position because we can be of service in a different way, which is help people understand the business side of it and save some money on their taxes.
I love it. Yeah. And I mean, the biggest thing I have, leaders that contact me all the time, and they're like, Courtney, you could make money and you could come over here. People won't even know. And I'm like, look, the thing is that we do a really good job over here in the accounting world. If we can free up money for your downline, your organization, we can help people understand that they have the money to get started in a home-based business. They just don't even realize it because it's going to pay taxes. If we can help them understand, you can keep more of your money every single month so that they have the money to buy the product and the services that they need so desperately. And then we can teach them how to keep more of their money when they get to a point where they're like you. And I think that's the best aspect and the best part. It's like we're in the network marketing industry. I think Dwayne will probably be the same with me, but we're not in it. So it works really, really well. It's like we can be on the outside saying, here's what you need to do. This is, what's going on over here. And here's how to maximize exactly what you're doing. So, it was great. Dwayne walked up to me after an event. I was speaking, and he came up, and I'm like, this is great. We can connect. So I don't understand anything. I want you to walk me through kind of, so I understand that there's a W-4 that we fill out here, and then there's a W-2 employee. So in Canada, there's what? What is an employee there?
Yeah. So in Canada, it's a T4. So letter T and 4. So if you're whatever your job is, then your employer, generally right around by the end of February, they have to issue the T4, and it goes right to the government. And so the government gets a copy of it, and the employee gets a copy of it. So it's on file, and that includes your federal tax, different provincial. So we have the provinces in Canada. So some provinces have different tax rates, but it's all it's all taken off at source. So your federal tax, your provincial tax, and then we have what we call the CPP, which is the Canada Pension Plan. It's not a tax, it's a pension. So it will be there when you're 65. It's not a lot of money, but it comes off right at source. You can't skip that one. And then we also have EI, which is employment insurance. So if you lose your job, what a lot of people have done recently, they can apply for government assistance. So those taxes you have to pay. But when we look at the federal tax, and this is, so as an example, I took, learn from find mentors. And so I asked you, and I took your presentation and we just switched it over to Canada. So we switched and said, okay, if someone is making $75,000, so the average household income in Canada is about $75,000. That's a household income. So sometimes you have one person making that, but on average household, $75,000, they're paying $10,000 of income tax, federal income tax to the Canadian government. $10,000. So I always circle that, and I said, this is where we're starting, that we can generate a tax loss in your startup year or two, and apply that against your income tax return to get that money back.
I love it. So do you have any idea as far as when you add up all of those taxes, like the province tax, the federal tax? See, here we have payroll taxes or FICA taxes, which is Social Security and Medicare taxes. And then on top of that, we have, which I guess would be kind of like your PP, So, which is the pension loan. So that's kind of the same thing that we have here for Social Security, I'm assuming. And then you've got the province tax, which is like our state taxes. And then there's federal taxes. So do you have any idea roughly the average that you have to pay in taxes, what percentage that is?
About 26%.
Wow.
So what happens if you're making $75,000, your take home is about 56.
And sadly in America, your take home is 46. So, our taxes on average are about $14,000. Obviously the dollar, I don't know if it's changed, but you had to make more money, right? So it's
our dollar's down. So if we want to exchange Canadian for, we go at par, if we come down there and look at par, but but that's kind of aside because all of my expenses are in Canadian dollars. It's only like when we want to go on vacation, and lots of people do vacation. So if I want to go to the US on vacation, it's about 70 cents on the dollar. So it's,
wow. Well, but here, the average household is 60 grand a year. That's what they make. And they're paying about 14,000 in taxes. And the take home is 46. And the cost of living in America is 53,000. So the average American is going in debt $7,000 a year to work.
Yeah.
And that was before the pandemic, right?
Yeah. And here in Canada, the average household, we owe about $1.70 for every dollar that we earn.
Wow.
So that was before the pandemic. That was before people got laid off. So people are carrying, credit card debt, mortgages, mortgages are mortgage rates are at an all-time low. But then the challenge was it's still about cash flow, right? So and the biggest one that we say is and that's where we can talk a little bit, because I actually work with my clients. We do cash flow planning, not budgeting. Budgeting, everyone just threw out their budget 4 weeks ago. Our budgets just all went out the window because our numbers, our incomes changed, and so we end up doing cash flow planning to say, what's your ins? How much are you monthly committed to?
Right.
And then what's the difference? And then you got to either bring more money in or chop money out. And the average person just doesn't know where their money is going. So the great way is when we do this exercise, we say, well, how much is your phone bill? How much is your internet? How much are you paying in rent or your mortgage? What's your car costing you? In Canada, I say where I live in Toronto, it costs about a minimum of $10,000 a year to operate a car.
Wow.
So when I took your presentation, I said, okay, $10,000. If I can just make 20% of that $10,000 business related. So if I'm driving 10,000 kilometers versus miles, but 10,000 kilometers, if I do 2,000 of that for business use, 20% of 10,000 is $2,000 of tax deductible business expenses for my car.
And so
that's a nice number. And 20% isn't that hard to do.
No.
And then we show people how to be more efficient. Like when I used to drop my kids off at school, I'd make sure I was going to a client, because then that whole trip becomes tax deductible. Like, don't drop your kids off at school, come back home and change your clothes, and then go out to see a client or go to a networking event. That's not good. That's not smart. Get ready, leave the house, drop your kids off at school, go to your networking event, stop at the grocery store.
Yes.
On the way home, pick up the kids, and then your whole trip for the day was business related.
Yes. We're speaking the same language. So one of the things that people ask me all the time and is, what deductions, and I've been told this numerous times, that you can't hire your kids in Canada and you can't pay them. And that doesn't seem logical to me.
So we're similar. So here in Canada, kids under the age of 18, no payroll. Like even if they get a part-time job from, like if they're working at Subway or Burger King or McDonald's, they don't pay payroll taxes, because it's not like they can go collect unemployment insurance, because they're students. So under the age of 18, no payroll taxes. And then again, they can earn. My nephew was 18. Last year, my nephew earned $15,000 in construction, framing houses.
Wow.
As a student, he says he just finished his first year of college, and he made $15,000. He has $15,000 sitting in the bank account.
That's awesome. And so what?
That's work though. You're working 12-hour days swinging a hammer. So you can. And like my sons, I didn't make them work for me. I went and put them. They actually went to work for themselves. So they went shoveling snow. So they actually started their own business, and they negotiated. One person paid them $50 and then I actually made them pay me to drive. I drove them. I said, "You owe me some gas money."
I love it.
But you can. So here's an example of how you. And I tell this to people. It's like, okay, like social media.
Yes.
Right. Because I have a 14-year-old and my other son's turning 16 soon. So they know more about social media than we do in some cases, or video editing. So I'm actually starting to create some videos to put up onto YouTube. And I show them Camtasia. I said, "Here, like play around with it. If they spend 5 hours doing it, I'm not going to pay them like for 5, but it's better than me spending 5 hours to do it." And now my son knows more about computers, and I could pay him. And now I'm actually going to have him charge me as a contractor. I got to have him set up his own business.
Yes. I love it.
Because he doesn't have to pay tax on his own business. And then he's not really on payroll. He's going to invoice me just like the guy down the street would invoice me. Like, have your kids. Yeah. Instead of just giving them a job, who wants another job? Make your kids start a business.
I love it. And see here.
Invoice you.
Yeah, here in the United States, that's a benefit actually in Canada. In the United States, when you hire your children as a subcontractor, then they have to pay self-employment taxes of 15.3%. And so that's great. Under the age of, and it doesn't matter if they're over age 18 or not, they would have to pay that self-employment taxes. So with that, they could truly start their own business, and then you could charge them, or they could charge you to work for them, which is great. Now, if if they were specifically like on payroll, how much money can an 18-year-old or 17-year-old make in order to, and then not have to pay taxes on it?
Yeah, it works out to be about like close to that. I don't know the exact number, but close to like $10,000. Like you can make about 10,000.
Awesome.
Before having to really, especially under that, like under the 18, you don't have to pay. But if all of a sudden as a, because here, what's the rule? Because there's a minimum age for direct sales, right? Like they have to be, they have to be 18.
18, right?
To put them into. So you can't put them into your down. You can't put your kids into your downline and have them start making real money or big money. But you could hire them as you can actually hire them as a subcontractor to just like my sons, because it was their business. It was their snow shoveling business.
Right.
They made we didn't have that much surprise, but we didn't actually have that much snow here. So they only had about 5 working days.
Right.
Because they didn't start till, they started just around Christmas time. But yeah, so it's a great way. And then that becomes tax deductible expense. And then the key with that one is make sure that it relates to the business, right? So I can't pay my sons to mow the lawn,
right?
Because the lawn, unless my business has landscaping. If your business is, if someone has a brick and mortar business and you have to hire a landscaper, my niece actually is in her early 20s and she actually has her own landscaping company.
Right.
So she comes and like mows the lawn of a veterinary clinic. Like you can hire your kids on that side. If you have a brick and mortar business, you could hire your kids to mow the lawn because that's an expense for the business.
Right.
Your house is a little gray.
Yeah. Well, yeah. And that's the thing, I tell people that you can hire your kids to do anything that you would hire somebody else to do, as long as it's business related. So as long as you are and two, like I have children who work in my accounting practice, my children now, since this whole pandemic happened, they're working full time at my accounting practice, my 15-year-old and my 17-year-old. And so, I'm paying them, one of them now owns a percentage of our company. We've given her 10% of our company. Because, as she continues to grow, she'll be a junior in college when she starts college.
She's going to Clemson, right?
Yeah, she's going to Clemson.
Wow, I got to go. Actually, because I used to work for a healthcare company. I used to work for AGFA, and AGFA's corporate office was in Greens.
Wow.
So
that's crazy.
Small world. And then my old boss, so she was a Clemson alumni, and I know Clemson is a big deal down there. So
yes, it is a huge deal, and she's super excited. She's going to take off the fall semester, and she's going to start in January working. So she's going to work for us until January, and then go off to college. So hopefully this whole pandemic will be over by then.
The kids. So I had a call with another potential client. She's coming on as a client. So I am also a licensed financial advisor. So this woman also is an advisor. She's 2 years behind in taxes, and she has a 10-year-old daughter. I said, well, you can actually hire your daughter to scan receipts.
Yes.
Yeah, I have one of those. I have a USB little scanner. I plug it in. I said, your 10-year-old could zip through receipts.
Yes. Yes.
All kinds of things.
Social media, bookkeeping, data entry, go with you to events, help you set up.
Yeah. I used to take my kids, because I did one of, like I said, we tried 12 different. So one of the companies I tried was Organic Gold Coffee. Mm-hmm. So we'd go and we set up the whole coffee booth at events. And at the time, my guys were probably like 10 and maybe 10 and 12, or 10 and 8 maybe, and I bring them, and like they were making coffee, and it's like, why not?
They learn really well. It's really good for them to help them with responsibility, to have relationship skills, social skills. I think it's amazing.
Setting up the banners, because sometimes there's a lot of stuff to set up. It's like then you have your own roadies. Like it's okay, here's the table, you get to get really good at. And I used to do we did events with bank code as well.
Yes.
So you have the banners and setting everything up with bank code and doing
Love
that.
it.
Yeah, I used to put them to work. I didn't actually pay them. They were free labor.
All right.
But you could. So here's a couple of tips that we also, when it comes to just to be a little bit conservative, because sometimes inside the groups. So when it comes to expenses, it's really about using everyday expenses, but say your cell phone. So here I have my cell phone right here somewhere. Here it is. So yes, my cell phone, it's a business. It's on my business card, and really and there's sometimes people are like, oh, but my evening minutes are free. And I really yeah, that's true. But I said, just be a little bit conservative. So we use I use 50%. So that I just don't want, unless you have a designated phone just for your business, then 100%. But if it's business and personal, I said, just be conservative and 50%. Same with the home internet. Unless it's a designated line, 50%, because you're still watching people are still watching Netflix or Disney or Amazon Prime, and you're still chunking through data for watching TV if you have time. So again, don't be 50%. So what happens is my phone bill or my internet's $100 a month, $1,200. Our bills here are are pricey compared to my cell phone. Like a decent cell phone plan in Canada is $100 a month.
Wow.
We don't have the $12 plans. So if I take those two, $100, $100, $2,400 a year, I take 50% of that. That's still a $1,200 tax deductible, tax deduction. $1,200. Add that to my $2,000 for the car. I'm at $3,200, and I haven't even added any travel.
Right.
And so we're easily getting to between $3,000 to $4,000 of tax deductible business expenses and I haven't even included the home office. Now, the one difference, I'm not sure if if this is like this in the US, but specifically here in Canada. In Canada, if I have a business loss, so say my first year, I was super successful in my direct sales business. I earned like $1,000. I'm probably in the top 5%, right? Because we know the average person doesn't make next to no money in their first year. But say I make $1,000 and I just generate $4,000 of phone and car. So I have a tax loss of $3,000. And now I have my house, right? I want to deduct my house. I can't make my business loss bigger with my house.
Right.
And apply that to my tax paid on my job, but I can have a loss carry forward.
Yes.
And this is the magic. This is hopefully if someone's watching, they've stuck with us or they're just joining. This is the top secret. This is why you file a tax return. It's for the loss carry forwards.
Yes.
So I have a client. So he's in the recruit. He's not in direct sales at all. He just started his own recruiter. He runs a recruiting business. So last year he did about $120,000 of revenue, and he has next to no expenses. Really good margin in recruiting here. Anyway, so we had a tax bill of almost $40,000. We're like, wow. And we looked up. So we brought up his numbers, and back in 2011, he had a college pro painting franchise when he was in school. And that business generated a $20,000 tax loss. So we brought that tax loss forward, applied his tax loss to his recruiting business. We saved him $6,000 of tax using that loss carry forward.
Yes.
And we brought that loss carry forward 8 years. 8.
Well, and people don't realize, I think the biggest misconception, the biggest myth out there is that you can't have a loss more than 3 out of 5 years. And I don't know if you guys have kind of the similar.
So, we use that one. We use that one to be. So I was on a call this week, and someone came up as like someone inside a group said, "Well, you can't have losses." And I'm like, actually, I have a client. So he was running, trying to do film video recording, right? And he had loss. He's like, and I'm like, revenue, as long as they're not listening, I don't think they're listening to us. But just be your slide is perfect. That slide you use, is it reasonable? Yes. So this is the gray area. So this is actually I actually have a brand new client. She just sent me 3 years of tax files for her, and we're probably not going to be able to claim it all because it's not. Here's the deal. So she has probably almost between $20,000 and $30,000 of training. Some Tony Robbins. I know you love Tony Robbins. I like Tony.
It's 100% deductible. And
the challenge is she has like zero. Like I'm not like
right.
zero income.
I would probably maybe create that as a startup cost and amortize it if you could do that. Well, and that's the thing. Yeah, talking about do what?
The big piece is also to say she's still like. It's different than another client. So she has like a $90,000 a year income. Another referral from you, of course. Yeah. One of the people that met you at an event. So she has her good day job, paying $90,000 a year. So we actually took her Tony, like all of her personal development, and we built it all out.
Yes.
She got her. She won't tell her name, but she got her check for $11,000 last week.
That's awesome.
$11,000
to spend money to go to Tony Robbins to learn how to
build her and mindset to build her company. And she didn't make a lot in her direct sales company yet.
Right.
It's building.
Yes.
So the other one, the challenge is with my other client. She's still kind of trying to figure out. She's not in a company yet. So we're trying to figure out what's the reasonable expectation for future earnings? And that's where I'm kind of like, I'm not so sure what that reasonable expectation to earn.
Right.
You're still, if you kind of go out and you're grabbing some pieces from here and a piece from here and a piece from here, and you're kind of like, what's your service offering? Different if you're in a direct sales company, because I could be an Arbonne. I'm building an Arbonne business. I'm building our organic gold business. I'm building a isogenics business, and here's my website, and here's all that stuff. It's pretty clear when you're trying to do something on your own. This is why actually home-based business and in the direct sales business are really good, because you get the business in a box.
Yes.
And visually you are in business, because you can say, hey, here's my website, here's my business card, here's all my products. I have inventory. I have an e-commerce store. I don't have to hold inventory. You can just go online, you can order products. Yes. It's really nice.
Yes. Now,
tell me people. Like, we don't have to sell people on it, but it looks really good.
Yes.
To justify, if someone were to knock on our door and say, "Really, you're in business? Like, where is your stuff?" And I'm like,
exactly. Exactly. And like the lady that you're talking about, my thing is that you could do, and I don't know how it works in Canada, but there's also, if you're attempting, like if you're trying to do research just on like rental properties and you haven't really bought a rental property yet, and you have all of this travel associated with looking at rental properties and going to rental properties, and, you have all this time, effort, energy, meals, mileage, cell phone, all that stuff. If you're doing the same thing, like if she's trying to look for a place to park and start making money, and she's going to go get that education piece that she desperately needs in order to grow her business, then that could typically be added in here as a startup cost, and it could be amortized. It might be only amortized over 15 years, but it would still be a tax deduction here. So I'm not sure.
Yeah, it's a little bit different, because I can bring in assets. So again, I can bring in, and this was a little bit different but similar. So I can bring in assets into the company. So if I start my network marketing company, I have my Microsoft Surface laptop, but I bought it 2 years ago. I tell people, don't go buy new stuff. Right? Repurpose the stuff you already have until you make some money. So many people want to use I'm in business to go shopping.
Exactly.
I don't need a fancy. You want to see my office? We live in a 1-bedroom condo downtown Toronto, so 750 square feet. Like, this is my that's my little desk. I have a desk about this big. Like, it's enough for my computer, because I go see clients now. I see clients online. Don't go buy 12 three. I need to have 3 monitors for my computer. I'm like, no, you don't really. Like right now, like like I said, tell people, go get some customers, make some money, and use the profit first model. Says, make some money, take a piece of that money that you just made, put it in the bank account, and then use that to spend on your personal development. So you're not paying interest on your credit card, or you're not maxing out your credit. I know this from experience because I did it for 4 years. That's how I met Sherry Tree, because I was one of those guys putting stuff on my credit card like crazy and not making any money until the light bulb came on one day. I'm like, okay, this is not a good pattern. You got to go get some customers, make some money. And then and you talked about it, and yours is I take some money, and then I use my earnings, my profit from my business, and then I go see Tony Robbins again, take my kids, make it tax deductible.
Yes.
But I'm just write a check. I'm like not worrying about how to pay it off my credit card, because I just
exactly.
So it's a bit of a challenge. But what was my thought?
So let me ask you a question while you think about that. Meals, mileage, or, you may have actual, we have clients that are high income earners, 11, 12 million dollars a year in income as far as direct sales. We have clients who just got started in their home-based business. So in Canada, can you write off your meals and your mileage? Can you write off so we talked about cell phone, we talked about internet, we've talked about business use of your home.
So the key one, the one that's a little, I'm not sure what yours is, but here in for us, for meals and entertainment. So really meals and local. So the big distinguish, and this is where it really ties in. And I think we relate to this, is that my tax clients eventually become bookkeeping clients. Right. Because they're like, okay, like we just spent way too long sorting through bags. I have a bag. I have a grocery bag full of receipts for a client there. And I'm like, okay, this is not. I do not. I have, but it's all in QuickBooks, but it's not reconciled. Yes. So it becomes a QuickBooks cleanup as well. I try and stay away from those because it's not fun. So what happens is local travel or local food and entertainment. So if I go, actually what I do is some of my clients, hey, it's your birthday. Turns out here's a really good tip. My girlfriend is a tax client. So for her birthday, as a family, we went out for breakfast. Yes. I paid the bill because it's tax deductible because she's a client. Yes. It's me taking my client out for breakfast for her birthday. Tax.
Is it 100%? Is it 50%? How does it work?
50%.
Okay. Got it. Same thing here.
Yeah.
They're trying to pass it.
But if I travel down to Greenville, if I travel to South Carolina to see you, and I go for breakfast there, 100%.
Oh, wow.
Because I'm traveling. So the best one is like when people go to conventions, and this is what it says, so here's a better example. In November, we went to London, we went to England. So one of the companies I work with, it's a modality I use in my practice, and they had a 3-day conference just outside of Oxford in England. So we flew, my girlfriend came with us, we flew over, spent 4 days outside of London, Oxford, 3 days at the conference, the hotel, conference costs, airfare, all that stuff, tax deductible. Wow. Then we hopped on the train and we went to just outside of London where Charmaine's aunt lives, and we spent 5 days with her aunt, visited her cousins, went into London, all that stuff, not tax deductible, but next to zero cost because we're staying with family. Right. 80% of the trip was the airfare and the hotel and the conference. That's all tax deductible because we went there for the purpose of business. We planned it a year out. I have emails, everything's documented. Business. Love tax deductible. So I tell people if you're going to Las Vegas, right? Going to go pro, right? If you're going to go to Go Pro, it's training for your business. Perfect. Mm-hmm. Flight to Las Vegas, hotel, food, all tax deductible. The cost of Eric Worre's event, all 100% tax deductible. And then stay over the weekend or something, or stay an extra day because there's no extra real cost. Maybe you don't expense the extra hotel night, but if you get it as a package, lots of times it's the same cost. Yes. Or it's cheaper sometimes if you stay over the weekend. Yes. 100%. So for Canada, 100% business-related travel, tax deductible.
I love it. And, one of the things, and I don't know if this works in Canada, but it works here in the United States. So you'll have to tell me if I'm wrong. So you can actually make a travel day on Thursday. So let's say me and Dwayne decided that when this whole thing ended, we were going to put together a tax seminar in Puerto Rico. And so on Thursday would be your flight down. That would be your travel day. So that's all tax deductible. And then Friday, we would have a 4-hour seminar. And so you would learn all there is to learn about taxes. It takes a little more than 4 hours, but you'd learn.
But close.
We'd at least go through, 5,000 pages of the tax code. But so then you go and do whatever you want for the rest of the day, the rest of Saturday, the rest of Sunday. That is all tax deductible. That's actually included. And then on Monday, we have another 4-hour event, as long as it's 4 hours or more. And then you can actually go home on Tuesday, and that is 100% tax deductible. So huge deal when you realize, because the IRS is like, okay, well, you could fly back home and then you could fly back on Monday. So, it would end up being the same cost. So they just give you that entire weekend. You can't necessarily write off the entertainment went away. I think that's going to probably come back just to get people out of the house and do things. And what people don't realize, and it's the funniest thing, it's like the government is enticing business owners to spend money. And when you realize that, they're, right now they're working on trying to come out with 100% deduction for meals. Well, that's to get restaurants back in business, so that we'll go to a restaurant and have a conversation with a client instead of sitting in our office. They're trying to, hopefully they'll add back the entertainment piece so that the entertainment industry comes back up. And so when you understand that, it's like, oh, we are getting massive tax deductions as business owners to generate economy. We're just moving money. And so we're getting tax deductions for that. We're getting tax deductions because we're creating employees. And then the taxes push off, mostly the majority of the taxes push off to employees to pay them, because somebody has to pay the taxes. And it sounds like that's exactly the same way that it works in Canada.
Yeah. And then when it comes to the one piece, I'm not sure if it's the same there. When it comes to entertainment, the one thing here, like golf memberships and a lot of the sporting stuff is not tax deductible.
Right. They did away with that completely here.
Yeah, because it's entertain. Let's just figure it's a little bit too. It was a bit too much boys club and a little bit too much. It's tough though, because it's. And again, lots of businesses still buy it, and it's just not tax deductible because they're still saying it's still good to do. Like you get, especially here in Toronto, where people are buying hockey tickets for the Maple Leafs,
right? Because
you can't get a ticket, and it's all corporate dollars. Or when the baseball team, the Blue Jays, when they were winning, people would give tickets away because it's a nice thing to do still with your company. Just use some of your profits. Not everything has to be tax deductible. When you're making good money, it's okay to pay a little bit of tax. And this may be a little bit contrarian to some people, but I say, I actually want my tax clients to pay more tax each year.
Why?
Yes. Because it means your business is growing.
So me and Dwayne,
there's a certain point, there's a limit. There's a limit to some taxable deductions, right? So at some point, if you're really making money, the government's going to get their share. So I just think let's minimize it. Let's not overpay, but let's not go to zero, because zero tax, because we have healthcare, we have roads, we have things that we still need tax dollars for. And if you're running a successful business, you still have to pay. You're going to still pay a share of taxes.
So let me ask you a question. Amazon didn't pay taxes for 20 years.
Yeah, I know, but that's a different thing. That's different rules.
So as far as I am concerned, Dwayne, it seems like, which is perfectly fine. I run into this issue all the time with other accountants. My goal is to not pay taxes, my goal for my clients is to not pay taxes. My goal is to spend money on my business to grow my business so that I pay less in taxes. And
but yes, what you have, as long as you're, but there's a risk there. So you're right. So, but you have to be open to, and you're right. You have to be open to that next tier
eventually
of spending with a plan. You have to have a plan. I just don't go spending, because I have the gentleman that you introduced me to, I just talked with yesterday. So I said, did you make money last year? And he's like, I'm not sure if I actually made money. Like, I earned money, but I'm not sure if I actually, at the end of the day, if there was much left over.
Yes.
He's like, I traveled a lot.
Yes.
I paid a lot on my car lease.
That's funny. I love
and
it.
He's a young guy, right? So young guy. So it's like, hey, and he's still learning the business. So it's like, hey, enjoy it.
Yes.
Because what's the point? You can't take it with you. So enjoy it. But now this year, we'll put a little bit more plan to the madness to say, not to make them pay taxes, but let's say, where are you investing the money, right? Yes. Because, and especially when you have a corporation, because you can get into real estate. So again, you can have, you're right. You are right. Is like you can get down to zero, but you just have to do it in different ways. And specifically here in Canada, especially when you incorporate, we have there's some rules to say what's the primary focus of that business. So you can't actually hold passive assets inside a corporation.
Oh, wow.
Because what the government, because lots of people were holding all of their real, so they were say a car dealership or something. Right. Car dealership. My primary business is cars, but I own a whole chunk of real estate. That real estate isn't your primary business, but they own the real estate because real estate is, cash flow positive. Use it trigger tax losses with real estate as well because the building's going to appreciate. But that's not your core business. And that's passive assets, and then they'll ding you up to like 47%. It's huge. Wow. So they changed that a couple of years ago. Wow. So you really have to. So when you get into corporations and having different strategies, specifically in Canada, you have to have a really good accountant to understand. Like we use life insurance, but life insurance inside of the corporation because that can actually do a dividend and other cash stripping. It's much more complicated, but there is, and that's the last tip we can share with people today. We talked about this earlier. So all the stuff we talked about is 100% good for sole proprietors. So you as an individual, all the car and the home and the internet and the cell phone, all super good for deducting against your self-employment or against your income as an employee. When it's time to incorporate, the rules change a little bit because now you're lowering your taxable tax rate for the corporation. And the guideline we use is around when you're making a profit of about $50,000 in your business, it's time to consider incorporating because our taxable corporate rate is lower when the income starts to grow. The personal tax rate starts to go, and the corporate tax rate kind of goes like this. So when you're making $50,000, it's time to consider to incorporate. But just remember, when you incorporate, the accountants want their share. So doing a corporate tax return all of a sudden goes from, hey, you're doing a $200 tax return to a $1,200 tax return. And people are like, $100? I got to pay you, but I was just paying you $200. I'm like, yeah, but it's much more complex.
Yes, it is.
So just be prepared when you're earning that money that you're going to have to pay your legal, there's going to a legal cost to incorporate and a cost for the accountants to do it properly. Set up that structure, especially if you have kids and stuff, like to set up all of the shareholders and the different types of shareholders, get all that stuff set up right at the beginning. So many people go and incorporate and just do someone does it for like $300. And then later they go, well, I want to set up this. And you're like, well, your corporation isn't set up that way.
Yes. And that's one, you're right. And all of that, the great thing is all of those are expenses that can be written off.
I love my business. I love your business. My cost is tax deductible.
Yes.
So, you charged me $200. I'm like, yeah, but the $200 you deduct that against it's tax deductible.
And we're not $200 over here, Dwayne. So you're doing great over there.
For a pretty simple.
Yeah. Yeah, and that's a great thing, and I love to address that. It is across the board. Like there's different prices. I see here anywhere between 1,000 and 2,500, even more sometimes for corporate tax returns. H&R Block and H&R Block and Jackson Hewitt are charging $400 for a simple tax return, and people don't even know it because they're getting eaten up with all these extra little hidden fees. And the goal is, and I think that the difference and I try to explain this to people all the time, the difference in a tax preparer and a tax strategist will save you tens of thousands of dollars, and depending on how big of a client that you are and how much money you make, I mean, hundreds of thousands of dollars, that we have been able to go back and find people. And it's only because, one, I'll tell you, there's three things that we typically find, and this is probably the same thing for you, is that one, it's the structure. Like the structure's not set up properly. And like what Dwayne is saying, that you need to make about 50,000. From my understanding, there's no S corporation, which is what most of small businesses are in should be in America. If you make more than about $12,000 a year in net income, you should be an S corporation to bypass about 80% of your self-employment taxes. So there's no S corp in Canada. They just have what we would consider a true C corporation, and the rates are lower in the United States. But the problem is, in the United States, you get hit with double tax. Not only do you pay taxes on the money going into the corporation after your net income, but you also have to pay taxes on any money you take out of the corporation as payroll. So it's not a good situation here.
And that's the same here. But again, there's strategies to say, okay, if I can pay. Again, is there strategies about once I have that corporation, how do I get the money out?
Tax free. Yes.
Payroll, I have to pay a little bit of payroll tax if I take it as salary. Dividend, if I take it as dividends, there's a lower rate. And again, we use other strategies like life insurance, because I could buy a policy and then take a loan that then becomes tax deductible. And there's all kinds of crazy. And it's amazing when you start earning some money. And then people go looking for help when all of a sudden there's a tax bill. When someone's not making any money, they're like, I'm not making any money. I'll come see you when I have some money. I'm like, well, let's start from right from the beginning, because you can actually get some money back. Yes. And that's what it said. So another referral from you, we're sitting down. So she actually already did her 2019 taxes, and she made a little bit of money, but she had her day job. So we're actually going to go back and we're refiling. So if anyone's watching, if you're still watching, we can refile. So even if you filed your own taxes and didn't claim your network marketing home-based business for the last 4 years, it's simple too. Like we don't even have to, we just go into the CRA site and we just submit the net change between the lines.
Wow. That's much easier. We have to send in paper tax returns, like we have to create the return. Then we have to go back in. And I mean, we amend tax returns every single day. I mean, we've never had a problem with one. We probably amend 5 to 7 tax returns every day here. It's probably, and I would say it's equivalent to preparing original tax returns for people. Yeah. Because people just don't realize. And so, you can go back. So you can go back 3 years in the United States. How far can you go back in Canada?
I don't know. I'll find out. I'm going to do 5. I'm going to try for 5. Yeah. The different was, I have another client where we're actually filing returns for the first time. So we're gonna file 10 years, because she had like 3 part-time jobs, and she was she has a rock band, and she's just one of those traveling kind of nomads, and she's like, I pay some tax. And I'm like, but then all of a sudden, here's what she wanted to actually open a non-profit to run a music festival. And in order to qualify for government grants, got to be up to date on your taxes. Yes. Wow. So a friend of hers referred her, one of my clients, it's her friend. So she referred me. And she's like, well, I don't have a lot of money. So here's the other, I don't know if you do this. I do this because I'm a really nice guy. I said, okay, I know you don't have a lot of money. Just pay me on the refund. Yes. So what we did, we generated her 2019, 2018, 2017, we generated tax refunds of almost $3,100.
Wow.
As soon as she got the first 2 years, I sent her my QuickBooks invoice. So the day she got her refund, bang, she paid my invoice. Because we're going to do it's a long-term relationship. We're going to do other things. And like, if I can't float someone walks off the street, usually I say, okay, you send me payment right before I hit the e-filing button. Because once I hit it, it's done, right? The money's, I'm like, not that you're going to run off on that, but it's, I usually ask for, because it's a bit of leverage, right? We don't have a lot of leverage. So you say, just, hey, and everyone's happy to do that.
Yes.
As soon as I submit it, because they know they're going to get their money within 5 to 7 days.
Yes. Oh, wow.
Maybe 10. Right now, just because of all the commotion that's going on, it's still automatically processed, because as an accountant, e-filing it, knock on wood, it doesn't really get questioned.
Right. Yes.
Because we're an agent. So I have to fix my website. So someone gave me this strategy, because I actually have my agent number, and they said, actually put on your website that you're an agent for Revenue Canada.
Oh, wow.
That's pretty good, because we are as a CPA, we follow our code of ethics and this and that. And I have my direct file. So I submit directly into no receipt. Like, we don't have, I make sure my clients have receipts, but we don't have to submit any receipts, right? Because we're submitting, everything's electronic. And then tax, like the notice of assessment that is issued right on same day.
Yes.
It's really good. Yeah.
I love it.
So I should say I'm an agent. So make it more qualified, more professional.
That's funny.
We're already professional, but to make it more, because we know the blueprint people, right? The blueprint people, they like to see all those credentials and so saying have Dwayne Richards CPA, because people like credentials.
It's so funny. Yes, you're exactly right. And so I just to kind of wrap this up, and this has been great, because it's so good, because I'm learning, because I don't know anything about Canada. I've been there one time. I went to a Tony Robbins event. I spoke. I was a speaker in Vancouver, Canada. And the one thing I did learn that, you have to actually announce that you're speaking in Canada, and I did not do that. So hopefully I don't owe anybody any money. I was doing it for free, so that was good. That was back in about a year and a half ago. But, the great part is that they are very similar on what you can receive as far as deductions. It's not necessarily the same amount in taxes. And I honestly think, after having this conversation, that the United States, we're further in debt. We are actually paying more in taxes. The percentage is higher for being an employee. And so, it's just crazy to me why people literally do not have a home-based business. Because at the end of the day, the only thing we're sharing here, legally, morally, and ethically, is a way for you to take what you're currently spending, turn your living expenses, redirect those into business expenses. And just by doing so and attempting to earn an income in some sort of home-based business, you have so many massive tax advantages. What I typically see is between $15,000 and $20,000 a year the first year. And just like Dwayne is saying, you've got access to losses if you do lose money the first year. And guys, we're not saying that you're necessarily losing money. Losing money on paper and losing money are two completely different things. And when you comprehend that, like I had somebody tell me today, she was freaking out because she's trying to get a loan for a bank. And the thing is, when you're a business owner, you have access to write off all of these living expenses, or, you would consider personal expenses, but there truly are business expenses. So you don't necessarily have to claim all the expenses that you have, but you have them. And so she was worried about getting a loan from the bank. And I'm like, loan officers don't comprehend that there's all these expenses that truly are personal expenses that go against your business. So, and so she was worried about that. And I'm like, look, we can explain that. You can add things back like depreciation. You can add those back. You can add back meals. And, so many people just have such a lack of education in this whole entire field. And that's what I'm trying to get through to people. So in the next couple weeks, it's my focus is to provide you guys with more financial people to tell you not necessarily just the same things I'm telling you, but give you a second understanding. So we're going to have Brian Carruthers, who, number one income earner in Legal Shield, is going to talk about the benefits of having a will and having a trust. And, I'm going to have my friend Nicola come and talk about credit restoration and credit repair. I'm going to have my friend Esther Wildenberg and Sherry Tree. They're going to be talking and sharing with you how to literally revolutionize your sales process. And,
it's good because as an example, so here's a quick example, because I said I am a customer. Yes. So I am a Legal Shield customer.
Yes, me too.
Because my 30, I think it's $39 a month. It's a legal expense.
Yes.
Tax deductible. And if I have a client that doesn't, I don't know why I would, because I told you we can leverage how we get paid. But if someone doesn't want to pay me, I can have Legal Shield write a letter.
Yes.
I can have them review contracts. So yeah, Legal Shield. And then you know what I use for new clients? I send them the bank pass.
Yes.
I said, hey, can you crack your code? It just helps me be I don't even tell them what it is. I said, it just helps me be a better communicator.
Yes.
If I know that you're a nurturer, if I know if you're knowledge or something, I just say, I don't even care. So they just do it. And it's like, then I get it. And because I had it. So it's really fun because I'm working with someone, and actually she's a bookkeeper and tax preparer in California. She has this fantastic program for Asana. She's built a whole thing with Asana for workflow in your business. I'll introduce you because maybe you might want.
Yeah, love it.
And she actually wants to sell her practice in California. So if you want to buy a book,
wow.
Anyway,
we'd have to move it from California to another state.
Maybe. Yeah, but you could do something. Anyway, so her bank code was KA.
And what is yours?
What's mine? What do you think mine is?
I would think it would be KB or BK.
No.
No?
I fool people. It's N first.
Oh, wow. And what's the second?
First. Then NK.
Acknowledge. Okay. See, mine.
And then blueprint, and then actions on the bottom.
Wow.
And it's funny because Sherry will tell you. When I met Sherry, I met Sherry at Never Work Again in Palm Springs.
Oh, wow.
In 2013, when they were still launching like the different versions of it, right? So the guys, she had like her top 5 teams all came in, and so the guys from Hawaii, Taylor, and so they came, and so they, they're cracking codes, and one of the guys is like, so we crack codes like, oh yeah, like action, I'm action on that sounds good. Put that on the top, and they're like, and the place right after, they're like, get up on stage. I'm like, hell no, I'm not getting on stage. That'd be like getting up to dance at a Tony Robbins. But eventually, I did a ton of stuff with Peak Potential. So eventually we got up to dance a little bit, but I was like, no, but action on the bottom, but I can do this because you know why? Because we're talking about something I know.
Yes.
We can talk all day, and I can do a podcast, I can do live videos, YouTube videos now, because it's something that knowledge people know.
Yes.
Texas.
Love it.
Yeah. So that's why we have it. You got to use all the tools in the toolbox.
Yes. And you guys will learn about the codes. We'll talk about the codes kind of so you understand. It's funny. Me and Dwayne are kind of almost opposite. I am an action person first, which means I'm super, super loud. That's one thing. I make a lot, I move a lot. I'm a nurturer second, which I love to give back. Like this is one of the greatest things on earth is to give back, but to give back through education, you can literally, it's like giving someone a fish or teaching them how to fish. And I think that's kind of the same lines that Dwayne is falling under. So I've got one more question. And then I've got to go. I've got to go see my kids and spend some time with them today.
My girlfriend made dinner, so I usually cook, and she actually made dinner tonight. It smells really good, and I'm getting hungrier every minute. So
I love it. So one of the things that I'm passionate about is giving. Social giving is combining your passion and your profits. And one of the things that you can do here in the United States is that you can give from a gross income level, and that become 100% tax deductible as a business expense. It's actually a cost of goods sold item. So when it becomes part of your business model, like Tom's Shoes, like Warby Parker, I do it for every dollar that comes in my accounting practice. We feed a serving of whole food, plant-based nutrition through a nonprofit called Manna Relief. We also, for every $25,000 that comes through our practice, we free a child through sex trafficking through a company called Operation Underground Railroad. So is there anything as far as charitable giving? Because that's such a huge issue on my part, because I know that people are going to stop giving to charities because of the pandemic, and they have, massive need in order to help people. So is there anything in the law? Because here, if you have the itemized deduction, and most people never go over itemized deduction. 96% of Americans never get benefit from charitable contributions from giving unless you can figure out a way to give like we are giving through social giving. So how does that work in Canada?
That's a great question. I have to come back to it because it is. That's what we talk about. Like, there's different ways to do it. Like if I just give a personal donation, it goes in, but it's like you get a tax credit, and tax credit's like 16%, and it's like really like what's the point? Right. Not what's the point, but it's like what's the point? So generally, what we tell people is, especially if you're running a business, is don't do it as donations. Do it as marketing expense or advertising.
Exactly.
Do a sponsorship to then figure out, okay, how do you do something to give or donate products, right? So if I donate products or if I donate something, but to do it so that it's either in your case, in cost of goods or in advertising expense. Yes. Because now you have to be careful about entertainment, because you don't want to say, oh, if I buy a ticket to a gala, then it's like, well, that's not really it's just marketing. It's entertainment. But if I'm a sponsor, if I'm now a sponsor, if I then, hey, I'm going to pay the $500 and be a gold sponsor, and then also my logo for my business is on, that's a marketing expense.
Yes, it is. That's awesome.
So it's to be creative with, like, not to be like extra creative, but to be a little bit more strategic in how you go about doing business.
And how you spend your money. Yeah. And that's a great thing. It's like the sky is the limit, guys. There's so many tax strategies out there. I probably touch on, just like I talked about before, we look at strategy, we look at missed expenses, deductions that you're not taking. And a lot of times we find a ton of money in overpayment in payroll taxes. And so, there's so many other things. There's cost segregation studies that could allow you to break out your property and write that off over a 5-year period of time instead of a 27.5-year period if you have residential property. There's conservation easements in the United States that we can put money into, and you get a 4-time multiple on that. So I don't know if you guys have that, but that's a huge deal for somebody that's over a 25% tax bracket here in the United States.
Yeah. We have other ones where, again, like my friends, they live on property. So again, if you have property, it's again having it, like if it's deemed like wetlands or forestry, then all of a sudden your property taxes go because you're not going to be developing it. And then you have to go do a survey, count some birds and how many squirrels are on the property. So you have to do that survey as a conservationist. Yes. So it's a little bit of work, but all of a sudden your property taxes, you could have like 20 acres and you're really only paying property taxes on like 1 acre of that land, which is beneficial. So like there's all kinds. So one of my clients, she's like, how many, like, what are all the tax deductions in Canada? Because in the US there's a whole list. You can get a list of like 300 of them. And I'm like, yeah, we have something like that. It's like, would you have that? I'm like, no. Like I do, but I'm like, it's so long. Like just medical expenses is like this long. And I'm like, don't go looking for more. Like don't go changing your spending habit just to go get more deductions in a sense. Like that's kind of silly, because it's still about cash. Cash is still king.
That's exactly right. So what I'm going to do so that people can get in contact with you, I'm actually going to list at the top of this so people can share it. You will be able to text a number, and it's just going to be Canada, so that we know that you are looking and interested in Canadian tax laws. And so you can actually schedule a time with Dwayne. So I think that will be the best way that we can handle that. So I can help you guys maneuver you to the right place, and we can keep track. But this has been awesome. This is I just recently, a couple weeks ago, I was doing a live with Dan Geltrude, which is America's Accountant, and we were doing an influence off, and it was super fun because and this is just having this conversation, you learn really quickly. Like, Dwayne has some thoughts that I don't have, and I have some thoughts that he doesn't have, and not necessarily is one or the other wrong. It's just the way that we perceive tax code. And so I want you to understand, I have people come to me all the time. Well, my accountant told me that you had no clue what you're talking about. And I'm like, go read the tax code yourself. You don't have to listen to me. I read the book, Lower Your Taxes Big Time. It completely and utterly changed my life. It really did. And the guy is IRS attorney, CPA. And now we're looking at, hopefully one day we connect and I can actually help replace him and take on his legacy, which would be an amazing opportunity. But, I love the fact that we can all work together and help each other. But there's going to be accountants that say that what we're saying is not real. I would urge you to go find the code. There's a couple books, Lower Your Taxes Big Time. My book, I think I have it here. Let me see. My book.
Yeah.
Yep. My book.
Maybe we could, and we talked about it, we can still do it. We could have a more relaxing, less taxing Canadian version.
Yes.
So then when we can flash that up and say it's the Canadian, because there's a couple little things that are different.
We're going to do that. So I actually, and that's funny because
put you on the spot.
Yes, I just finished another book that I'm actually creating this whole content, like my entire presentation. So I've actually created that book. We're going to be publishing it. And so we need to do it in Canadian. Like, we need to explain the same thing in Canadian. And we're doing it in Spanish as well, because we want people to comprehend what we're saying. We want them to be able to, have access to go back and look at the tax code. What we're saying is completely ethical. It's moral. And at the end of the day, we just want to help you free up more money so that you can have a better life, so that you can help more, have more, do more, save more, and give more. So I appreciate you, Dwayne. I'm going to put the connection in the comments. If you got any last words of inspiration or anything you want to say.
I was going to leave it. You did it all right at the end there about all the mores, right? You can, it doesn't have to be or. You can have it, you can have and, right?
Yes.
You can have your man and. It doesn't have to be or. You can have and.
I love it. I love it. We are so connected. So I'm so glad. It is so funny, the difference in the personalities, and we still connect. So I love it. All right. So I will get you guys the information for Dwayne if you want to reach out. One of the things that I am going to give away, I'm going to put this number. We're not going to be like spamming you. What I'm going to give you are like 4 things. I'm going to give you access to download my book for free. Okay. An ebook. If you want to buy it, I think it's $7.95. You can just pay for the shipping. I'm going to give you access to a booking link so you can book Dwayne. And then I'm going to give you also access to a booking link to book us if you want to talk to us about tax strategy. And then the other thing I'm going to give you, which we haven't created yet, and I guess Dwayne's got to work on it now, is a deduction spreadsheet for what we actually see on a daily basis that are tax deductions that you can take advantage of right now by attempting to earn an income. So God bless. I hope you have an amazing day and go back to more relaxing and less taxing. Bye, guys.